All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, July 27th. Looking at the S&P 500 where it closed last week on Friday, we are just grinding higher. We did have a little bit of a breakout here of the 628, 629 level and have just been grinding a little bit higher since then. Over the weekend, we did get news of an EU trade deal coming together, so that is great before the August 1st deadline. So keep an eye on the news cycle for any more details of that. But it does seem like the framework for that deal has been agreed upon. In terms of looking at where the charts should be going this week, honestly, I am assuming that we're going to see a little bit of a rise based on that EU news, but more neutral than anything else, mostly just based on our RSI. Our RSI indicator has been grinding in the bullish to overbought territory for quite some time. We are firmly in that overbought territory again on the daily chart. If we toss this out to a weekly chart and double check it, we have been firmly in that overbought territory for about a month now. So it wouldn't surprise me to see some more neutrality or a little bit of a pullback coming out in the next couple of weeks. But with the trade deal news and a lot of economic data coming out this week, really it's anybody's guess how the market is going to react to the actual economic data coming out. We do have a federal funds rate on Wednesday to keep an eye on. It is widely expected that they are going to keep rates as is. So given all of the information we have currently, I am assuming just a slight grind higher or neutrality in the markets on the S&P 500, not looking for huge moves one way or the other, just a slow methodical grind this week. Going out to the triple Qs, basically rinse and repeat the exact same thing. You can see on our RSI, we are in pretty much identical territory on the RSI. And if we toss this out to a weekly chart, it looks almost identical as well. Again, being overextended for the last few weeks, going into and then breaking out of our previous all-time highs there. So while we do have some positive news that should support the market, we are overbought on both of these indexes. So I'm not assuming that we are going to have a large movement higher. Again, just that slow methodical grind on the triple Qs as well. Going out to IWM, IWM has been more in consolidation and actually looking at our RSI is still in bullish territory, but is not overbought. So actually the RSI on IWM or the Russell 2000 is indicating there might be a potential catch-up trade developing here. If we go out and look at the weekly chart, we are overextended to the top side on the weekly chart. So that throws a little bit of cold water on that analysis. But given the backdrop of what is going on in the marketplace right now, I would probably be more inclined personally to play some kind of a breakout above this 227 level, let's call it on IWM, as opposed to playing the other marketplace indexes directly. If we go out to Dow Jones, Dow Jones is looking similar on the RSI, still in bearish territory, but has a little bit more room to go. And we are actually pressing up into that previous all-time high. So if we toss this out to a weekly chart, you can see we are overbought on the RSI on the weekly time frame, but do have a little bit more of a confirmation, I would say, for having potential to run on the daily chart on the Dow Jones versus the other two indexes, the SPY and the triple Q, mostly because we are testing into this all-time high level but have not broken it yet. And if there is going to be continued strength in the marketplace, the Dow Jones will likely follow that of the S&P 500 and the Nasdaq, both of which have already broken that horizontal resistance. Now, going out to IBIT, dropping this back to a daily chart here for IBIT. We had a little bit of a break of support on Friday that honestly the charts didn't look great on that in terms of our break of this neutral consolidation zone, but I do really like that it bought back up towards the close. It did close below the 9 EMA, which I don't love, but actually the futures market since this close on Friday over the weekend has signaled that this price has actually bought back up. Buyers did step back in and defended this rising 20 period SMA. So tomorrow on IBIT, we are going to see prices gap up here, probably into that 68 or 68.20 level, which would flip this chart back bullish once again. So just a couple of days here of consolidation and then one day breaking down below support And then again, Monday morning tomorrow, unless something crazy happens in the futures market over the next 12 or so hours until market open, I am expecting this to gap back up and signal bulls are back in control for potentially another movement higher. So keep an eye on IBIT and Bitcoin. Going out to gold. Gold's still just kind of consolidating in this big wedge pattern. This is technically an ascending triangle with a horizontal resistance zone on the top and a slow, methodical increase in support on the bottom. As long as this diagonal resistance on the bottom holds and the price on Friday was the low, we should expect prices to come back up into that 315 to 317 zone once again and retest the upper end of this triangle pattern. But for me, I'm not adding to my position right now. I am just holding long-term position and selling covered calls against gold. Going out to silver. Silver consolidated for a little bit at the highs, had a little bit of a break, and then failed, dropped back down. If we look at the futures down here /SI, we can see that gold and silver are basically neutral, both down 0.08% and 0.1% since futures opened. So not much change on that. So I'm expecting silver to just kind of grind neutral here for a little while, trying to prep for another leg. Finally, going out to the US dollar. The US dollar has been holding that $96 level for the last few weeks here. I would really love to see just continued neutrality here. I don't want to see a big movement in either direction. If it breaks down, that will cause weakness and cause some pretty significant volatility in the market. But I also don't want to see a big rise. I actually kind of like the development here, just being range bound ever since mid-June. And I actually think that's probably going to continue with prices below 99.50 and above 96.30 for the foreseeable future. Now, if we go out and look at our heat map, this is the 1 week performance showing the gains and losses in a percentage term from last week. We can see a lot of green coming into the market, but not a lot of big movements, mostly just 1 or 2% movements. We did have an oversized movement on Google and LLY, and down in some of the bank sector stocks like Wells Fargo, which was up over 4.5%. So I'm keeping my eye on communications and technology, and again on financials as well. A little bit of a mixed bag everywhere else. Going out to, last but not least, our economic data from Forex Factory. This is going to be a huge week of economic data. We have data Tuesday through Friday, so nothing tomorrow on the open for Monday, but Tuesday through Friday, big slew of economic data. And obviously, the most important one is going to be the federal funds rate at 11 o'clock Pacific Standard Time on Wednesday, and then followed by the press conference at 11:30. So those are going to be the two that I am looking for, and mostly just looking for that press conference to see what Jay Powell says, if he gives us any indication as to what rates are going to be doing this fall, because it is widely expected once again for rates to stay the same at this July meeting and then potentially start decreasing as we move into the September and beyond meetings. So I'm going to be looking really, really closely at that, watching to see if he updates any of his language that he uses to give us any kind of a clue as to where that's going to be going, and if we can, in fact, expect some kind of a rate cut starting in September. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments. Give me a like and share. Would really appreciate it if you enjoyed this content, and I will see you next week.